Yeah, making money's easy. Yeah, keeping it's the hard part. What's up, YouTube? Don with the Don Franz Show, and in today's video, we are going to go over options contracts on the Robinhood app. I'm going to show you guys how there are some other tools to help you out in the markets. Let's jump into it. Robinhood. If you found this channel from searching Robinhood, you might just be brand new to it. Now, we gotta be careful because there's three kinds of people really talking about Robinhood. The one that just got in, right? Maybe you. Your friend told you about it. You used the link. You downloaded the share. I do have a link in the description. If you do use that link to download the description, if no one hasn't downloaded it yet, you do get a free share of stock. A random one. It's up to $1,000 in value. Let's be honest, you're probably gonna get the $6 one, but you're $6 up out of nowhere. It's free money. So that could be you. Then there's the second type. Now, if you're brand new, take what they say with a grain of salt, because there's the people that they've moved on. They are a savvy investor, if you will. So they don't use Robinhood anymore. Doesn't give them the features that they want, and they'll give you all kinds of reasons why theirs is best. Take what they say with a grain of salt. I don't want to write them off yet. But the truly experienced person, right? Someone like myself, something I'm trying to preach a little bit more often to everybody. I don't like the negative connotation Robinhood gets from some of those guys. Robinhood gives you access to the market. That's what you need. Now, a pro and con, you can make or lose money very easy. Yeah, making money is easy. Yeah, keeping it's the hard part. Easy come, easy go. Now, be careful as you're getting lured into options, because what does this normally sound like to you? You can spend less and make a lot more. Sounds like a scam. I can tell you, without the proper education, you're going to come into this, you're going to blow your account, you're going to be one of those people that says the stock market's rigged, it's just gambling. And if you heard that from somebody, they lost all their money, they had no idea what they were doing, and that's that. So hopefully with this video, maybe we can take it one step further. I'm going to briefly touch on how you can use Robinhood and a couple other tools as well to maybe follow me on my live streams, or just overall in general, attack this in a better, more planned out way. So let's jump into it. You got your favorite ticker picked up. Right now, we're going to use Amazon for the example. I'm actually in an Amazon contract right now. So you take your ticker. Right now, we're going to click trade. Buy, this, just to buy shares. Click trade options. We're going to come right here to this main screen, this main beginning, Robinhood Discovery. I love how easy this is. I don't know if I can ever not have a Robinhood account because of how simple it is. Remember, easy come, easy go. You got all the time in the world to learn this before you blow your account. So what you'll see here on this main page, we have Discovery. Now we have a bunch of dates up top. We have an arrow up, down. We got the zigzag, and then we got the little squiggly line. We'll get to that. Now buy a call. We can click Learn More. Buying a call is similar to buying a stock. You want the price of the stock to go up, making your option worth more so you can profit. Why would I buy a call? When buying a call, you're paying for the option to purchase stock. Since an option is typically for 100 shares of stock, you're able to pay less money with the opportunity for higher returns. Very true. And then there's how do I make money? What are the risks? Let me tell you what the risks are. This can go to zero. No matter how much you spend, there's always the risk it goes to zero. Going along the top, we got choosing a screen monitoring call. There's all that. But you're not here for that. You're here to get into the markets. Again, slow it down. On the home page, we can see short-term, high risk, medium-term, medium risk, long-term, some risk. I can tell you right now, ignore this. If I have to explain what these are to you, you're not ready for it. The only thing here that's changing is the date. Don't think I'll just get some risk and I'm all of a sudden safer. I promise you are not. Take a look at this. We got option strike 3,280 expiring August 21st. What you effectively did was take away the ability to have the bad habit of bag holding. Now, in a bull market before this crash, it didn't matter what you bought almost. All you had to do was hold it and it was going to go up. This puts that date, August 21st, and you're out. Now, what you're saying is you want Amazon to go to 3,280. You will buy 100 shares of Amazon at that price. Now, you don't have to exercise your contract, right? You can just buy and sell the contract. Now, it's $20, $20.38 times 100 shares. That's per share. That's a per share basis. So $20.38, that's your premium. You want Amazon. You're saying, I will buy Amazon August 21st for $3,280. Now, if it's below that, your options contract is worthless. Think of this as a coupon. Why do I buy a coupon from you that when I scan it at the store, I have to pay more for the product? I would just go and scan it and pay for whatever the market value is. What this becomes is when you come in the money, right? All of a sudden, Amazon shoots past that price. Now you have a coupon to buy 100 shares at $32.80. Now, if I have a coupon for $5 off on a $10 sandwich and I sell you that coupon for $2.50, right? I just sold you that contract, right? You'll still save money. You pay a little bit of premium, but you're going to save $5. Now, don't get ahead of yourself because you just paid times 100, right? The $20.38, that's $2,038 for the option to buy at $32.80. If Amazon goes to $3,280 by August 21st and it closes at that price, your options contract is worth nothing. So you paid $2,000 and you lost $2,000. Now, if Amazon pushes up to $3,281, your contract is worth $1 times 100, $100. So that's how much further you need to go. Now, if you want to know your break-even price, where does this need to go for me to not lose any money by August 21st? Take your $20, right? So I'll show this screen. Take your $20, add it to the strike price, right? So that effectively makes it $3,300. If Amazon pushes up to $3,300, your contract is safe. You break even, you won't lose any money. So you need to do at least that plus every dollar on top of that. It's profit. So as you can see here, the medium risk just gives you more time for the stocks to fluctuate. Things, they go up, they go down. It's not a straight line. Now that's up. That's buying a call. You're buying a call because you want it to go up. Buying a put. This is your ability to short on Robinhood. You're buying a put because you want it to go down. Everything the same, but you make money to the downside. Then here's you think it could go up, it could go down. These are some different strategies. I'm going to show you how to manually do these. I wouldn't really stick with these. I think you can do some better. But you can see the multiple strikes right here. So what you're doing here is you're buying a contract, selling another one, or iron, you're buying a call and you're buying a put. So let's say you found a YouTuber. You're just going to follow him. And he tells you his option is, he gives you a date up here. August 21st, you select that. Let's go August 20th. We want to give a little more time for us to be right. Now a whole bunch of strike prices. Where do you want it? You can see the further out you go, the cheaper it gets. So let's pick that $32.80 contract. The $32.80, the one we just looked at, that was $20. We went to August 28th. Now this one is $42, so $4,200. Right? You can just click on that. Now you have the ability to buy it. We can buy one, and you can see here your price for that, $4,205. Now click on this little down arrow right here. This gives you the Greeks, what you actually need to know, what you probably don't know. Delta, theta, your gamma, your vega, those are all important numbers. Those are everything you need to know. There's your volume. How many people traded it today? Open interest. How many people swung this one overnight? And you got your highs and your lows. Not very effective, right? If you know what you want, you can come in here. How many do you want? Boom, hit that number, hit 1, hit review, swipe up. Now that's to buy a call. Now if we wanted to buy a put because we want it to go down, we'll just swipe it over here, put, same expiration, but now we think we want the stock to go down. So now here is your share price, what it's currently at. Anything below this, you'll see price starts to go down the further away you get from price. So this is, I think Amazon's about to really sell off. I think it's going to be $3,000 by August 28th. You can go right down here. You can go to 3,100. If it goes to 3,000 by that time, and you're right, you're $100 in the money. It's a $10,000 contract. And we will get into what all of these are and everything about these in some later videos. So if you're new here, subscribe. I go live Sundays and Wednesdays. I can answer all your questions. I can tell you about it. I even have a course all about options. Now let's say you're a little more advanced and you like, or maybe you want to cap your risk. You don't want to lose that much. You want to buy a spread. So come up here, click select. We're going to go to the call side. We want to buy a call spread, a vertical spread. Amazon's 31.56. This is buying an in-out spread, right? We're going to buy one in the money. We're going to sell one out of the money. 31.56. We're going to buy a $5 spread. So we're going to go in here. We're going to select. We want to buy that one. Now we want to sell the 31.60. Okay, that is a $5 vertical spread. Most you can make is $5 on that. But you can see we're going to pay $8,800 for this. We are actually going to sell another contract and collect $8,500 $593, so about $8,600. For a grand total, this is going to cost us $220. $220 for the ability to make $5. $500. Click review. Tell us how many you want. Now we got the bid and the ask. The market's close. It's a super wide spread right now. Again, 220 times 100, 220. That's how you buy a spread. Now it will show up just like that. Now to close that, you're doing the exact same thing. Or if you want to manually, now in the Robinhood options, you will just click that. I don't have one of those to show you, but you'll see the spread, click it, and click close. Or come in here and manually do it, right? So you sold the 3160 and we bought the 3150. You'll come in here and you will sell to close the 3155 and you will buy to close the 3160. Remember, we sold that contract, so now we're going to buy it back. You sold to open, we're going to buy to close. So X out of it. So here's the one contract I have. It's for December 18th for 3,900. Again, you'll just click it here, click trade, and we can sell this one because we bought. So our position, we have one, we will sell to close. Had I sold this, this would be a -1 right here, and we will take that and we will buy to close it, to bring that thing to zero for whatever your credit is. So be careful. What this gives you access to is access to blow your account very quickly, not knowing what you're doing. Now, what you see here is what I talk about on YouTube all the time. So TradingView, I use this to chart things out. I wouldn't chart anything out on Robinhood. This is just a little line graph, doesn't show you anything. The candles, I gotta be honest, even they suck. Get off Robinhood. Use it for what its ability is, right? The ability to execute the trades. Get on something like TradingView or download Thinkorswim. You'll probably use this anyway. But if you want to get used to it, you want to dabble it, open up something like this. It's an options chain, because look right here. I can tell you right now, volume. A lot of people like this one. Not so many people liked this one. 51 people traded this one today, but 2,700 people traded this one. That's going to, that's your liquidity, right? You want these to be liquid. Where you can get in trouble with these is not knowing what you're getting into, right? And while options on Robinhood are very simple, very quick to buy, it is if you know which one you're buying. So if you're on Robinhood, subscribe to my channel. I'm going to go over how to use all of this. TradingView, Thinkorswim, some extra tools to really help you, to really make you profitable as a trader. I hope I earned your thumbs up. That's the quick Robinhood tutorial, and I hope to see you in some future videos.